You are about to discover what no news report has ever clearly told you. Behind the sudden market crashes, the red numbers on Wall Street, and the tension behind closed doors in Washington lies a silent and dangerously calculated decision that could redefine the global economic order. What's at stake here isn't just the economy, it's the very power of the United States in the world. It all began with a brief, almost procedural announcement made by Donald Trump last week, a rushed speech with profound implications. He reaffirmed his tariff program, a controversial project aimed at protecting American industry at all costs, even if the price is the collapse of relations with historical allies. At the very moment the former president reaffirmed his stance, markets began to oscillate like never before, volatility returned with force, investors rushed toward safe assets, the dollar faltered, and eyes turned toward a country that has always been considered one of the pillars of global economic stability, Japan. But what Japan did quietly, without fanfare, without scandalous headlines, left the financial world in shock. No explosive declaration, no public threat, no incendiary speech on social media, Japan has just begun to massively sell U.S. Treasury bonds. Considered for decades as one of the safest investments in the world, they have begun to discreetly leave the hands of the Japanese government. This wasn't an isolated movement. There were billions of dollars of bonds sold in just a few months. If you found this analysis valuable so far, take a moment to subscribe to our channel and hit the notification bell to stay informed about economic shifts that mainstream media won't explain. This way, you'll never miss our in-depth analyses that go beyond surface-level reporting. The question that spread through the corridors of the Federal Reserve, the U.S. Treasury, and the largest brokerage houses on Wall Street was the same: why? Why would Japan, which has always been a strategic partner of the United States, which has supported American debt with almost unwavering confidence, now divest itself of its dollar assets? The answer, though not officially announced, lies between the lines of the new American trade policy, especially in one word: tariffs. The U.S. government has decided to play hardball. Electric vehicles from foreign countries, high import duties imposed on imported vehicles, including those produced by Japanese giants such as Toyota, Honda, and Nissan, brands that not only define global automotive engineering but also represent billions in exports for Japan. Imagine what this means for the Japanese economy, a country that, although technologically advanced, still heavily depends on its industrial exports to maintain its economic balance. Reducing the competitiveness of its main products on American soil constitutes, in essence, a direct threat to its trade balance. And Japan has responded, not with words, but with precise and devastating financial action. If the United States wants to play tough, Japan can play even tougher with American debt. Do you understand the gravity of this? The United States currently owes more than $33 trillion. To keep this debt alive, the American government sells treasury bonds to international investors. And who has always been among the biggest buyers of these securities? Japan. But now Tokyo is sending a message, and it's not just for Washington, it's for the world. For decades, the alliance between the United States and Japan has been built on mutual interests, military security, technological cooperation, and, of course, financial stability. Japan bought American bonds, thus helping to finance the American deficit. In return, it guaranteed privileged access to the largest consumer market on the planet. But what happens when this balance is broken? The answer is what we're beginning to see: a change in posture, a recalibration. The sale of securities is not just an economic strategy, it's retaliation, a warning. And perhaps the most alarming thing is this: this strategy is working. You see, when a country the size of Japan sells U.S. Treasury bonds, it puts downward pressure on the value of these bonds. This drives up interest rates, and when interest rates rise, the United States has to pay more to finance its own debt. This translates into more budgetary pressure, more instability, and less room to maneuver to invest in key areas such as infrastructure, healthcare, and, ironically, industrial incentives. In other words, the more Japan sells, the higher the bill becomes for the United States. Now you might be wondering, what if other countries did the same? That's the question keeping economists and global strategists awake at night. Is Japan the first to break its silence? China, for example, has already reduced its dollar assets in recent years. Russia has virtually abandoned American bonds after sanctions, and there are signs that countries like South Korea, India, and even Germany are looking for ways to diversify their reserves. We are facing a geo-economic movement of de-dollarization, during which countries are beginning to reduce their dependence on the dollar as the global reserve currency. And if Japan, one of the United States' greatest historical allies, feels motivated to follow this path, what could stop others? The most curious thing about all this is the absence of a formal reaction from the United States. There has been no statement from the U.S. Treasury, no press conference from the Federal Reserve, just speculation and timid reports from market analysts trying to decipher charts with steep declines. Perhaps because acknowledging the problem means admitting that the trade policy adopted by Trump is leading to serious and unexpected consequences. Perhaps because no one knows with certainty how far Japan is willing to go. And perhaps because this is only the first move in a much longer game. The big question now is not whether the United States will be affected, the real question is how long Washington can hold out without Tokyo's financial support. And above all, we are facing a new form of economic warfare in which enemies don't need to cross borders, fire weapons, or form military alliances, just sell, silently, and let the empire collapse under its own weight. This is no longer a routine episode in the global economy. It's a paradigm shift. And it all started with a sell click in the Japanese financial system. But if this was just Japan's first response, what follows could be even more devastating. Imagine spending years developing the highest automotive technology on the planet, investing billions in research, leading sustainable innovations, developing award-winning hybrid engines, and earning the trust of millions of consumers around the world. Now imagine that, in an instant, the largest market on the planet closes its doors to you with an unwelcome stamp called an import tariff. This is exactly what Japan faces when the United States decided to impose heavy duties on foreign electric vehicles. The target wasn't just China. Without saying it openly, the American government drove the nail into a longtime ally, especially Japan. And now, for the first time in decades, Japan is responding forcefully. But the retaliation hasn't taken the form of sanctions or incendiary diplomatic statements. It's been done in a subtle, surgical, but powerful way. Tokyo has begun to systematically reduce its exposure to American debt. The message couldn't be clearer: if you block our industry, we block the financing of your economy. And this is no bluff. The crucial question remains: what will the United States do in response to Japan's silent but powerful response? Will it yield, reduce tariffs, or double down and intensify the conflict, even if it costs the confidence of its main partners? The answer could change everything: the financial system, political stability, and even the next elections. Because an economic crisis provoked by a poorly managed tariff war doesn't choose sides, it overthrows whoever stands in its way. And you, as a citizen, consumer, worker, you can no longer watch this passively. What was once a trade war has become a war of trust, and in a war of trust, it only takes one well-placed doubt to overthrow empires. The dollar will not disappear overnight, it will lose relevance, influence, and, above all, coercive power. And when that happens, the United States will have to relearn how to live without the exorbitant privilege of printing its currency and passing the bill on to the rest of the world. Are they ready? More importantly, are we?